Today we are going to break down a trade I took for Nasdaq. This was actually a trade I took about 5 or 4 days ago, and I managed to close it yesterday. It's currently the 28th of October 2025. So yeah, let's get into it. That align with the bias that I may have on the bigger time frames. So we had this expansion heading towards our 25,000 level over here. These levels we refer to them as big figure levels. You can think of them as liquidity pools basically. Whenever price trades into these levels, we can expect a retracement. They are very significant. Whenever price trades into them, you can expect these types of movements, right? So I started paying attention actually to these assets once we had taken out this sell-side liquidity over here, and then closed above, made another expansion big higher. So it was about Thursday, Wednesday, I think. Yeah. So I was looking at this, and then I went into my 4-hour time frame. So it's basically, there's more detail to what we were seeing on the daily time frame. These levels are very important, and this is our breaker right here. It's a form of a resistance level which price had rejected from, and then started trading lower all the way down into this level. Since I understand that price has taken out a significant level above buy side liquidity, and then we made this grab on sell side liquidity, and then started moving back, it's obvious that this low over here is an intermediate term low. An intermediate term low basically is a low that I do not expect price to return back to within this short-term bias, which means this low is protected and price will avoid by all means to retrace back into this. As you can see over here, this was Tuesday, right? This inside of this down closed candle over here, we have an order block, a bullish order block. These order blocks that form right when we push sell side liquidity are very, very good support levels. I like to use those a lot. Right now I just want to paint, the bigger picture, the context of what was going on, right? So let me just remove this real quick. What else? Frame. Okay, so I usually spend a lot of time on this time frame specifically as an intraday trader. This is where I'm going to see if there is going to provide me with significant opportunities, or just rather avoid trading at all. Again, price pushed sell side liquidity, expanded higher into this resistance level over here, and then we made this retracement back into this. This is our order block, our bullish order block right here, and it's a very good order block because it formed up exactly on this sell side liquidity level. That's money presence right there. When you see this expansion, these big players investing a lot of money into that asset, this is how we see their activity in the market. So it's always best to move with them, right? So as I said, this low is protected, so I'm currently looking for opportunities to trade right into this high. That's how I draw on buy side liquidity currently. Sell side liquidity, buy side liquidity, Persian buy side, went for sell side, swept sell side, expanded higher. On the 15-minute time frame, I tend to look for short-term sell side liquidity, short-term buy side liquidity, some fair value gaps, premium fair value gaps, and discount fair value gaps. Discount if they're below 61% level, and premium if they're above 61% level. Remember, price had taken out this level of sell side liquidity right there. That's sell side liquidity. Once we purged sell side liquidity, we're expecting price to make an expansion higher away from our sell side liquidity all the way to buy side liquidity, which is exactly what happened over here, right? Back and forth movement, traded into this resistance level over here, and then retracement once more into this order block over here, right? So at this order block, and then price made this final expansion towards our buy side. This was our target right here. See this bingo, this bullseye thing right here, symbol is that's our draw on buy side liquidity. But here's something interesting. Price did not immediately take out this level. It did not purge above and then continue rallying or reverse back lower. What it did instead is it traded really close. Look at this. We traded very close into this, and then we started retracing back lower. The average retail trader sees this level over here, this level, as a resistance level, so they start selling. Smart money trades against retail traders. That's why 90% of the time they lose. Since this is a trick, they are most likely trying to trade against them. They will sell for a very short time and then expand higher. So it's safer for me to start looking for those buying opportunities, which is exactly what I was expecting. Get this small movement lower right here. And so what? Look closely. This fair value gap over here with this discount fair value gap right here. I was expecting this to be our reversal point. I was expecting price to trade into this and then expand higher to take out this level, which most retail traders have placed their entries and their stop losses slightly above. That's all liquidity. Currently they are all liquidity. So price traded into this. It was Wednesday. I entered my first buy right here, and then with this movement higher, we activated this order block over here, right? That's another block. And then this level right here, there's a daily fair value gap over here. I use the upper and lower quadrant as a reference point basically. That's what price is going to retest multiple times, and smart money uses these levels as reference points for entries and exits. So that's what I use also. So once we trade into this discount fair value gap, our draw on liquidity is buy side liquidity. We entered our first entry here, expansion into this, then retracement on Thursday. It was this New York time, New York kill zone right here. It's always safe to enter once price has shifted market structure bullish. This could have been a retracement and then expansion back lower, into these areas over here. So it's always safe to wait for this break over here, shift in market structure, and then retest. This is when I added my second scaling position over here, right? And then I sent in a signal into the group for you guys to answer. It's a really nice and secure trade. This one traded into that fair value gap over there. That's where I entered. Placed my stop just below this low over here. I could have also placed it below this, but it's important to remember this is the 15-minute time frame. That would have been a very wide stop actually. So yeah, placed my entry here, retested this upper quadrant. Remember I said smart money uses these levels as reference points to place entries. We came back and retested this over here. See, that's more retest over there. First target was this resistance level over here. This is a retail resistance level, which means there's a lot of liquidity above this area. And we did in fact push into that and then continued expanding higher. This was Friday. Okay, 5-minute time frame. This is where I take most of my entries. This is where I can apply proper entry and exit strategies. So remember this fair value gap over here. That's where my entry was, and then I had to let me just place my stop just beneath this. My targets on buy side liquidity, entry on the 15 minutes fair value gap over here, stop loss just below this second fair value gap. There's one, then there's two, and then my stop loss over here. So my TP was about here. This level was my first take profit level, and then my second level up here. And this is how it went. Price continued expanding. Then we took buy side liquidity on that's 1 a.m. Friday, New York time. That's New York time over here. First targets New York time. First trade closed. This one closed when we hit this, and then my second trade. I actually did not close this trade until somewhere here actually. So I saw something over here, so I decided to just I had already moved my stop to somewhere around here, so I was okay with moving my take profit to somewhere here. Hopefully you guys were able to enjoy the video and learn a few things. I know it's a lot, sometimes it's just a lot of information coming your direction. You may have some things you missed along the way. So yeah, that was my 1:10 trade. It was a very good trade. So yeah guys, take care.